this A plus scenario versus a pattern trade. It is, and it's all going to come down to the current leg and what we did and how we got to the area we want to trade out of. So both examples, we trade into a 4-hour gap, we sweep a 4-hour intermediate low. But what you notice in like an A plus scenario is we have very strong, good internal targets, and then we have a clear manipulation leg trading into the gap, rather than just trading down into it without a clear manipulation leg. Ideally speaking, our time frames are going to be aligned, but that's just not always going to happen. So the next best scenario is getting a nice internal leg that we can now be break even at a very clean area. So right here, we generate these highs, relative equal highs. Again, this isn't always going to happen, but this is just like an A plus scenario. And then we get a very clear manipulation leg trading into that gap or the area we want to trade out of, and we get a nice V-shaped inversion here, rather than in a nice, like a pattern trade scenario, this is not a clear manipulation. Like, we're just continually dumping right now. We might get a little reaction out of here, but is this really where you want to put your money? Probably not. In a scenario like this, you have kind of two options. You either wait for the resweep, so chances are that this fails. You wait for a resweep. Now you have a new leg. You could call this your manipulation leg right here that swept the low. Now this is clean because you have a nice break-even point here, and you have an internal model that can take you to the upside, rather than just expecting a random reversal off a little inversion. Or if this ends up being the swing point right here, and we get a nice reaction out of there, maybe we put in like a 5-minute change in the state of delivery, whatever it is. Now you have your middle time frame starting to align to the upside. What do you wait for? You just wait for your continuation model. We get a 5 or 15-minute gap here. Price trades back to it. This is your manipulation leg now. You wait for an inversion out of there. You get your inversion right here. And now you have a nice clean break-even point. Again, this is going to be like one of those discretion things that you're going to have to start journaling on your own and noticing when you take those little random inversions, they don't end up playing out. There will be times that they do. Again, like I said, you will end up watching trades fail. But that's just kind of part of the game. The difference between gambling and trading is a statistic of it. Like both outcomes aren't certain, but the statistic for winning can be higher if you follow your rules. Exactly. I mean, yeah, RG. Everybody, like, there's always an argument that like trading is gambling, and it's the same idea as gambling, but you do, like, you have a pattern, or you have an edge in the market at least. Is the first one not a V shape? Larry, which one are you talking about? This one or this one? Me and Niall going to fucking our Miami. Enjoy that, man. So when price is chopping inside a high time frame for value gap, consistently making new manipulation leg, and it is not clear, it might be better to wait for a move than try to catch the continuation model. Continuation model? Jonzo, what are you talking about? Yeah. So again, if things are not clear, like in this example, we traded in this high time frame gap, and then we're just doing this. There's no reason to be trying to trade in this consolidation. So you always want to wait for manipulation. Like my rule is I always want to see some type of manipulation before taking an entry. So again, you might get an inversion in this range, but that's not a high quality inversion, and that's going to be, again, building that discretion. So then you get your resweep here, and now again you have your manipulation leg and your inverse here, clean break even point. This is a super common one. I'm glad that you brought that up. We'll get an inversion in this range, and that's just not a high quality setup. You always want to wait for some type of internal manipulation. My inverse trades got so much better after I started waiting for a change in the state. I do like changing the states. I think they're underrated for inversion traders. I know a lot of people like trade them. Pattern trading been cooking me a back testing. Yeah, especially inversions, Gus. They're so easy to pattern trade. So you'd say it's always better to catch a continuation trade after a sweep, at least if you miss the initial entry. Yeah, I'm not going to say always better, because in a scenario like this, where we have a where we have a clean like internal manipulation here, right? We have these lows, and then we've generated highs, and then resweep those and get a nice reaction out of there. I don't think there's a reason here to wait for a continuation model, because by the time that happens, by the time we open up a 5-minute gap, you might have taken this high and already traded into this gap. So it's not always better to wait for that. But if you're unsure and it's an unclear condition, yeah, just wait for a continuation model. Or wait for a continuation of the downside. This doesn't always have to be the swing point. Let's say you miss this inversion here, great inversion, you end up missing it. Look what you can just do. We trade back into this 15-minute gap. You don't have to target this low, because this low could be a high resistance low. This could be your swing point here. But then you just take a rebalance play in the opposite direction here. We're going to leave gaps on the way up, right, that we missed for our continuation. You just take like a reversal continuation model here. You trade into a 5 or 15-minute gap that this original inversion was targeting. Inversion to the downside. Now you have LR to target, and you have that unfilled gap. And this is kind of the beauty of trading like the way we do, is we can always adapt our targets and adapt to what the market's giving us. And maybe you don't even get this entry. That's fine. I would rather you sit on your hands if markets or the market conditions are unclear than try to force a trade. Like when you end up forcing those trades, you might win 40%, 50%. Who cares? Go flat on the day. Journal it out. Maybe you missed that trade. Learn from it. But if you're unsure, just don't put risk on the table. Change the state of delivery is disrespect of current order flow and respect to new order flow. Yeah, same. It's the same idea as like a market structure shift or break of structure or inverse. It's all the same idea as you're looking for a change in order flow. I was here. We have a clean V shape. Yeah, so V shape is definitely, you do want to see a clean V shape, but you also want to see a clean leg that you're V shaping. If you're trading against a leg that's like this, and you get an inversion here, this leg isn't really invalidated yet. And again, those will play out sometimes, but just not the highest probability conditions. Yeah, exactly what 45 said. Isn't that part of the continuation? You wait for a 5-15 pullback and a 1-minute change of state. So my rules, I'm not necessarily waiting for a change in the state. I know some people do, but yeah, you wait for a pullback into a 5 or 15-minute gap, and then you wait for the highest time frame inversion of the leg that traded back into that gap. So like, let's say this is the 5-minute right here. You're just waiting for the highest time frame inversion of the leg that traded you back into here. Asia loves doing this, bro. This class out. What do you mean Asia loves doing? Do you trade Asia session? I don't know what that means. What if the CSI change in the state? I'm retarded. CISD takes your break even. Fantastic question, Chubba. The trade from Friday. I still can't believe we gapped down that far. That's fucking absurd. This is a trade that we took live, and it technically took our break-even point right here. This is the low, this is the internal low, and this was the entry that we obviously waited for a pullback here. And again, this is going to be a discretion thing. I don't have a specific rule for this. The best thing I can give you here is, again, we're going to use our logic here. 9:30 opens up right here. We immediately get a leg up. Like you guys saw, we put in this SMT here and held this 15-minute gap. And then from here we got our inversion of this 5 minute here, and we put in a change in the state of delivery. Like I said, we took that break-even point already. But in this scenario, I was still fine putting risk on the table. Why? Because this is a very mechanical break-even point. This is not a super significant low here, and we're also just showing super quick and super intentful price action. Like this is a very strong close. And then the final piece right here, we have triple equal lows. That can be my new break-even point because it's a strong draw. And then I also am very confident that this high is going to be protected, and that ended up being the high of the day right there. Because again, we got a clear manipulation leg. If we can find the manipulation leg, the internal manipulation leg, you are going to have a high win rate. That is just, if you can put your stop loss in line with the manipulation leg, high or low, you are going to be protected. So yeah, this is a scenario where it takes your break even, but we put in a change in the state, and again, now we have an order block on our side, a high resistance high to put our stop loss at, and then equal lows, that's our new break even point. So this is just a scenario where I would be fine, and I was fine, taking the entry despite hitting the break-even point. Hope that helps, Chubba. What makes something clear manipulation? Sometimes I think the wicks are manipulation, but I got cooked. Good question, Larry. I would say the two most obvious signs of manipulation are going to be the time. So you are going to typically see manipulation at 8:30 in the morning. This is going to be your high impact news, and sometimes people just get that 8:30 manipulation. This is EST. You will see manipulation between 9:30 and 9:45, again EST. This is your first 15 minutes, and this is again a really nice, I'm glad we're bringing this up. One of my kind of like discretional ideas is I typically really do not want to trade the first 10 to 15 minutes because we're usually manipulating right at that 9:30 open. In this case, I took an entry at 9:40, but I really don't like to trade before 9:40. And then sometimes you'll see like a 10 a.m. open manipulation. Even 11 a.m. open manipulation at our new hourly candles, or our 10 a.m. is a 4-hour candle here. But again, it's the idea of the open, high, low, close candle here, or whenever new money is coming into the market. So for our candle opens in a bullish candle or an up-close candle, price is going to open at the body, manipulate lower typically first, putting in the low, and then expand higher, and then close back within the range. Our goal is to stay out of it while we're manipulating, and then get in while we're distributing. So that's your time-based manipulation. And then the other sign that you can align with this is if price trades into a significant area and then rejects it. So again, right at 9:30, a time we expect to manipulate, we trade up, we put in an SMT with our external high. ES fails to take that high. NQ takes those highs. And then ES also holds this 15-minute gap. So that's a sign of manipulation. We get a swift move up, and then look at the reaction we get out of here. You might not know that this is manipulation while it's happening. Well, while it's happening, but then you see a nice reaction out of there and a confirmation lower, like it changed the state and an inverse. You can be pretty confident that this is manipulation. Make sense? I'm way behind on chat. I apologize, guys. If I miss questions, just repeat. Kind of lagging. Am I lagging, guys? Did you guys hear all that? Cool. Must be you, whoever said I'm lagging. Must be you, Top Hat. I already forget who asked the question about manipulation, but is that clear? I want to make sure that's clear because that's a super important topic. Screen is just a little laggy. Gotcha. Yeah. Probably it usually happens when I start screen recording. Hey, what's up, Billy? How are you, man? Always wait for the macro market open. Yeah, I'm not a huge fan of macros. I used to try to trade macros, but I mean it's the same idea as the open candle, so yeah. Can you explain manipulation like? 'Cause I don't really understand. Yeah, Adam. I mean, we just went over that, but it's the same idea. So, like, are these all gone? Yeah, fuck. I deleted all my drawings. Damn it. Um, Again, in like a scenario like Friday, in this scenario, this is the manipulation leg right here. Because it sweeps internal liquidity, and then it also sweeps that external liquidity that we're trading towards. And again, it's like everything we were just talking about. You'll see a swift move in one direction and then a swift move out of there, and then it also trades into something significant. So in this case, that 4-hour gap and the 4-hour intermediate low. Same idea with like accumulation. I think you know what it is. We're accumulating, and then we get a swift move out of there. That's our manipulation. It's just a move out of a range or into something significant. Doing well, Billy. Thank you, brother. What is open, high, low, close? Good question. So like I spoke about before, and this is important, especially you'll see this at 10 a.m. Let's draw these out really quick. So bullish candle is going to be an open, low, high, close. And a bearish candle is going to be, did I say, no I didn't, open, high, and then a low and a close. So the idea here, especially on your higher time frame candle, so 10 a.m. is the open of a new 4-hour candle, is we're going to open here on our bullish candle. We're going to put in a low. This is our manipulation of that new candle. And then we are going to expand out of there, put in the high, and then close back within that candle range. Same exact idea for a bearish or down close candle. We open here, manipulate higher, putting in the high of the candle, expand lower, putting in the low, and then close back within that range. Quarterly theory. Ah, fucker, I have streamer mode again on. Let's see if I can remember how to turn this shit off. Because it's like I can see some of your guys' names, but I can't see the rest. It's weird. Fucker, I don't know where it is. Oh, there we go. There we go. Would you... Bro, added the wrong guy. Top hat. Would you say we did an IFAG to enter, and let's say inverse do happen, would you wait for some type of momentum or see the IFAG itself? So yeah, my entry model is an inverse fair value gap, so I'm always going to wait for that to take an entry. And then the entire point of an inverse is that we're seeing that momentum. So yeah, you do want to see momentum out of where you want to trade from. So yeah, same idea as displacement. For the change in the state traders, you typically want to see displacement above the high or low that you're trading through. Same exact idea. You want to see displacement through the fair value gap that is getting ran through. Sequential SMTs. I feel like I've heard of that before, and I have no idea what it is, to be honest with you. Could you show an example on the chart of how the PO3 would look like? Yeah. I do not have one off the top of my head, but let's just take a look at 10 a.m. on Friday. That might be a bad example because Friday was super, super bearish. Nope, perfect example. So, first we'll look at the 10 a.m. hourly candle right here. Down close candle, we put in obviously our open, our high, and our close. We'll just mark these out. But by zooming in to like the 15-minute time frame, we can see exactly how the candle formed. So 10 a.m. opens right here. This is our open. This is the start of that new hourly and 4-hour candle. We trade lower first right here, but we put in a high still in the first 15 minutes, right? This 15-minute candle traded higher, putting in the high of the 10 a.m. candle. From there, we distribute or trade lower, putting in, I completely fucked this up, low. There we go. Then we distribute lower, putting in the low of the candle, and then we close back within the range. We saw a pretty aggressive close back within the range just because we swept out a bunch of liquidity here. But exact idea we just talked about. We get a open here, put in the high in the first 15 minutes, so you could call this your manipulation. In this case, we traded back into a 5-minute fair value gap, and then we see our distribution lower, putting in the low of the candle, and then close back within the range. Totally unrelated. What up, Zach? Good to see you, brother. Lucid Solid. Dude, I'm liking their rules, I'm not going to lie. Their new black accounts look pretty unreal. They're literally like Top Step, but one-time payments and no activation fee. Low-key the meta at this point. Hot time frame, power 3, 2 degrees. What's 2 degrees? When y'all think IFEG is going to be patched? They're already patched, bro. They don't work anymore. I started in like November. Had a great feeling. 45. You only started in November? And you already got your payout? I'm retarded, so I have to look at the... Damn, that's... Holy shit, that's quick. That's literally like basically as fast as my two buddies. They pay out absurdly quick, Zach. I haven't taken a payout from them yet. I haven't started trading with them, but I'm actually buying their black accounts. But from what I've seen, they literally pay out in like 10 minutes. Is Tuesday holiday? No, Monday's holiday though. Exactly, Junior. Dodgy taught Einstein. They're not going to work anymore. I've been trading for a year and a half. Oh, okay. That makes more sense. That's still fucking awesome though. Psychology tips: if my fund is down $500, continue as usual or de-risk slightly. Billy, that depends where you're at. If you're pretty confident in your model and you're okay with just like restarting if you end up blowing your account, I wouldn't even de-risk, to be honest with you. But if like, for example, you don't really want to buy another account and you want to focus on like building good habits, all that good stuff, you could de-risk a little bit. But Billy, I know you're a good trader. Like I can tell you know what you're talking about, so I wouldn't de-risk, honestly. These accounts are made to be blown. Fucking let it rip, you know? Also started November, 200 away from my first... Let's go, Bence. Congrats. That's actually fucking sick. Do you full port an A+ setup on evals? Yes. I do not waste time on evals. All profitable traders down, don't worry. Yeah, the last week was super brutal. If I didn't catch that fat trade, I would have ended red, but I can promise you everybody that knows what they're doing has struggled the last like week or two. Evals are one-night stands. That's actually a fantastic analogy, Billy. But yeah, we just went over a bunch. I want to get refocused here because we are recording. So we went over the open high, low close, etc., manipulation legs. Everything made sense, everybody. Now is the time to ask questions. Again, I'm here for you guys. And then anything else, questions, general questions, all of that. I know I missed a bunch here. Just got back from the mountain, Keon. Keon, you missed I don't even know. It's recorded though, this time, I promise. Yeah, I'm recording the right screen. Let me double check. Yeah, we're good, we're good, we're good. Gonna be an open half day. I'm not sure. I know it's a bank holiday, so I'm not even getting on tomorrow. And yeah, I'm not gonna lie, dude. This new NWOG is fucking absurd, though. It makes me feel better. Only got the trade Thursday and Friday last week and got fucked. Yeah, again, losses are not always a bad thing, guys. Like, yeah, it sucks. Like, I fucking hate losing. I've always been a super competitive person, and I've always been really, really hard on myself, and that's never been helpful. You really have to have a short memory in trading. You have to you have to have the ability to take a loss and then just move on instead of letting it affect your next trades. You know. Generally, that shit had me doubting my ability for months, like 100% every day. You know. Billy, what had you doubting your abilities? Getting for 2 weeks, losing 4 trade losing streak. Yeah, I mean, Larry, some of that is going to be coming down to experience and being able to avoid those losses, and then other times you're just going to have losses that are unavoidable, and they're good losses. But the statistical play out, you know, that's the entire point of risk management there, right? You see so many, and it's a little bit different with evals and stuff and like fundeds and everything, but the idea is you risk the number, or you risk a good number that allows you to take those losses. Like you could see 5, 6, even 7 losses in a row, and that's normal. Like I've gone on fat losing streaks before, and then like the winning statistic always plays out if you can manage your risk and not let those losses end up like making you restart, because then you have to restart. And then you have to go through the whole process of passing another eval, and then your winning statistic is like you're bound to take some losses again. When using the PDI model, does the manipulation have to deliver off above a 5-minute FEG, or can it be FEGs that is less than a 5-minute time frame? Taz, so technically speaking, you could have a PDI that doesn't trade into a gap. Whatever. But an A+ scenario, you're going to have at least a 5-minute gap that we're trading into. But there will be times that we don't, and it still plays out. But generally, I prefer at least a 5-minute gap. I don't really trade anything. Like, I see some people take, like, continuations out of a 1-minute fair value gap, and that does not make any sense to me. The lowest I go for a continuation, or, like, context-wise, is a 5-minute gap. Best thing to have a hobby while you're trading. User 45. Yes. 100%. Could not agree more. Literally just, like, get the fuck away from your computer. Like, I still have days. Like, you guys saw me... What day was it? It was just fucking brutal. What day was it? I don't know. I called the draw over and over and over and could not get a trade to it. And then I took that 1 minute out of a 5-minute, ended up getting stopped out. We traded to the 15-minute and then traded to those relative equal lows. Bro, I was fucking pissed. And those emotions are never, ever, ever going to go away. Like, obviously, they get a little bit better and you learn how to deal with them more. And you have a little bit more confidence in your system when you've, like, been able to take money out of the markets. But, like, I promise you those emotions are never going to go away. You have to learn how to just get the fuck up and go to the gym, go snowboarding, go fucking take a walk, like, whatever your thing is. You said earlier the market's been moving differently under Biden. Back to us in 2020 price action. It looks clean, but I heard everybody glazing the 2022 price action. Curious about what the hype around it. Yeah, I didn't trade in 2022, so I couldn't tell you. But, yeah, I mean, Trump has been a super volatile president. Look at our higher time frame. He announced the tariffs, bro. We got a 10% drop in October. A nice like 5% dip there in a singular day. We had this crash of like 25%, 26% there. And And this type of stuff just did not happen in Biden. During Biden's presidency. And then obviously like outside factors are gonna, like the fundamentals that drive the market will be different too. But yeah, markets are always gonna move differently, like different cycles. I saw the PBFEG video. Patty uses 1 hour for bias, 5 for condition. Yeah, exactly, Nick. Literally, time frame alignment. You use your daily 4 hour, 1 hour for your high time frame structure. Use your like 15 and 5 minute for your middle time frame that you are trying to align with a low time frame structure. I literally do not give a fuck what the 1 minute is doing without context of the 15 minute or the hourly. Would you use 6, 7? All right. 6, 7, 8 minute, etc. for setting conditions? Nah, I never have. 5 and 15 is all you need. Wrestle. I have a lot of respect for wrestlers. I never did, but my brother used to wrestle. I'm sure that's awesome for your mental, you know? Should I be risking differently for continuations versus MAC? I feel like continuations are very high probability. And would you be willing to risk more in continuations? So, Billy, generally, I recommend people risk the same amount per trade. That being said, I don't necessarily do that. I'll give you... Alright, first off, MEC versus continuation, I would risk the same thing. Like, I wouldn't try to do it differently on off different models. But for this is an example. A situation like this, I might de-risk a little bit. Just because there's a reason for price to stop me out still. So like you get your continuation model, whatever. There's a decent chance that price wants to come mitigate this gap here. And then you get a re-entry. And still target that same target. And it ends up playing out. A situation like that where you have a gap above, you could de-risk a little bit. Just so that if you end up getting stop rated, you have capital to still put on. And then the other scenario, and this is more of an eval thing, but not even really more of an eval thing. With an XFA, or an activated or funded account, whatever you want to call it, I will typically, and this is where it comes down to trading the game of prop firms. This isn't necessarily like great habit for actual trading, but when it comes to prop firm trading, it is. If I have a super A+ trade that I would like, you know, you bet your fucking nuts that it's going to play, I'm going to double my size and try to build a big buffer on that. And if I lose, that it's going to suck. And then you're going to have to rebuild a little bit, right? Like you might even end up like putting yourself in a situation where you're resetting a lot of progress, but that's the game of prop firms, is cycling them. But I'll put on a lot of risk and a lot of size for something I'm super confident in, build that buffer, and then I reduce my risk down to like $150 just to get my $150 days, and then I take the payout and cycle out. And then same exact idea for an eval. You wait for an A+ scenario, you fucking not full port it, like you don't want to blow your account, but you risk $750, $800 if your max loss is $1,000. Trump's the only president consistently tweet. I've never seen another president do the shit he does. That one long? Yeah, the fucking Tuesday long that you're talking about. That was just fucking brutal off a tweet. Never use delivery less than a 5-minute FEG. So Taz, what I mean by that is I don't use a fair value gap lower than the 5-minute for a condition or context. I'll use like a 3-minute inverse, 2-minute, 1-minute inverse, all that. But I'm not using a 2-minute fair value gap. Like if we trade back into like a 2 or 3 minute gap, I'm like, I don't care about that. Was a recording from the Ancient Model class posted? Yeah, I apologize. Loco Hose 69. Hell yeah. I recorded the wrong screen on that, so that's not going to get posted. But there is an 1.5-hour entry model masterclass that we recorded a while ago. That's up in there if you're looking for that. Do you find yourself opening positions with half risk, then adding full size if you get... Not typically, Billy. That's not something I really do, but I don't think that's necessarily a bad idea. I know some people do that. I just personally don't. What do you think about Tradeify select accounts? Maybe I'll just look up the rules myself. I've never traded with Tradeify, but I've heard good things about Tradeify. Yeah, Larry, I was pissed that day. That fucking sucked. 2 ticks from TP. And that was one of the trades that I went very heavy on. Because I was super, super confident in it. 45, I agree. Yeah, so there's definitely a balance of like entering with the half risk. Sometimes it is a sign that you're just taking a bad trade, but then other times like there is a definitely reason to still put risk on for it. For continuation, if there is no gap to inverse, but there is also a tap into high time frame unfilled gap and low time frame unfilled, good momentum displacement over you'll call it. I typically don't. I really like the whole idea of an entry model is it's repeatable. So over a long period of time, like we were talking about, that entry model is going to give me a winning statistic. But that's exactly what we're talking about. Top hat is like if you have discretion to take that trade and there's a very clear draw and you get displacement out of it, then like you could still put a trade on. I just personally don't really like if there's not an inverse, I'm not really taking it. Is it better to full port a good setup market open to pass my evo or try passing it during? I don't know. I've never traded Asia on silver, but I would recommend just trading your normal session. Do you always wait for both NQ and ES to inverse and FEG to enter, or NQ inverse and ES? Yeah, I'd still take that entry. So if NQ like inverses a gap and ES fails to, I'll still take it because chances are the surrounding context that makes me want to take this trade is still there. So the asset that fails to is going to end up doing it. So yeah, I'll still take that entry.